Today, we have Upexi CEO Alan Marshall and Chief Strategy Officer Brian Rudick. Welcome to the show. How are we all doing?
Doing well, Tim. Thanks for having myself and Brian today.
Yeah, thank you very much.
Brilliant. Now, before we get started, quick note, if you are hiring crypto, you should check out Campus out of order of your candidates. It will help you pick out the real crypto natives. Head to theblock.co/campus to get a 3-month free trial. Now, today's episode is about crypto treasury strategies. This is something I've been noticing has been a growing trend recently, and I think some people are starting to get a little bit concerned if it's getting a bit out of hand. So we're going to grill you guys a little bit about this, and maybe you can put me at ease. So just to begin with, what made you choose Solana for the treasury play?
Hey, Brian. Brian.
Yeah, so for us, it was a pretty easy decision. I look at Bitcoin as the best monetary asset and Solana as the best high performance blockchain. There are obviously 20 or more MicroStrategy imposters. We didn't want to be the 21st. We'd rather be the canonical Solana treasury company. And then the second thing is Bitcoin is a $2 trillion asset, so it is literally the 7th largest in the world. It is unlikely to 5x anytime soon versus Solana, which is literally 4% the market cap of Bitcoin. It could 5x by year end. And so for us, it just made a lot of sense to be underpinned by the leading high performance blockchain. To get into a couple details around that, so Solana, in my opinion, is like the first second gen blockchain. So it has a lot of big innovations over something like Ethereum. And I think you're seeing that emanate in best in class performance. And then lastly, that is attracting this large and growing ecosystem of users, developers, and dApps. So you're seeing like Solana put up the best metrics out of any chain, even at a smaller market cap than some others. So yeah, for us, it was pretty easy. We see Solana as an end game winner for high performance blockchains.
And also as an asset for a public company, the staking revenue adds another kind of tier of profitability for us. So that was one of the other kind of like things that really pushed us towards like the Upexi. After speaking with Brian about that, that was why it was the final decision on that, being that adding that to our repertoire of revenue possibilities and growth.
Yeah, how does the staking revenue work if it's locked Solana? Do you still get the staking rewards and you can sell them, or are they locked in accordance with the vesting schedule?
The staking revenue is still paid. Well, it's still earned, and it unlocks whatever the linear schedule is, whether it's 20 months, 30 months, 36 months. So every month it unlocks, and then we move that from locked into a liquid position, so monthly.
Yeah, just to double click on that. So we have a lot of value accrual mechanisms that all compound, and our ability to access LockSoul at a discount is one of them. Most individuals actually can't get that, but we can. And then when we do buy LockSoul at this 15 to 20% discount, those are built-in gains for shareholders. If you put this discount on any sort of yield equivalent metric, we are roughly doubling the staking yield, and we're doing it in this risk prudent fashion. LockSoul actually does have a fairly liquid OTC market, so we could sell it if we want, but like we have pledged never to sell our soul. We're a buy and hodl only strategy, so buying LockSoul at this discount, given that we're not going to sell it, really aligns with our strategy and then provides for those gains for shareholders.
And in terms of like where you got it from, is this ultimately from the sort of pool of locked Solana from the FTX estate that was sort of sold to a bunch of firms over like the last year?
That's one of many sources of it. There are ultimately other sources of it, but so we buy from all sources.
Yeah, and one thing that differentiates us, so we're backed by 15 leading crypto VCs. A lot of them own a lot of this, and so we're working with them and different brokers to where like they could easily drum up, and we do feel that we have better access to LockSoul than others might.
Okay, and where do you see Solana's adoption in the next sort of 1 to 3 years, and how does that impact your long-term strategy?
I'm super excited for the next 3 years. In my mind, the biggest thing always holding crypto back in general were unclear rules and regulations in the US. I think we could actually be on the precipice of the mother of all bull markets because hopefully, fingers crossed, we will get digital asset legislation in the US next year. And the reason why this is so important is if this happens, institutions will have to jump in a big way. It's a little antithetical to like crypto, but is actually these big institutions that have literally billions of customers, billions of dollars to throw at it, a lot of the top devs, and built in trust. And so, if you can imagine something like Google Chrome adding a built in crypto wallet and then Amazon accepting USDC payments, like we will just onboard the masses. And so, I actually think like we could be on the precipice of this step change function in usage and adoption, and Upexi and Solana will be big benefactors of that.
And is your Solana strategy more compelling since there isn't an ETF for it, where there sort of obviously is for Bitcoin and Ethereum, because it's sort of harder for especially traditional companies to get exposure?
I think that's both. One is right now today, it's pure access to owning Solana directly. Also because of the way treasury companies trade at NAV, like anticipating that future growth and that staking revenue, people can make a multiple on their, investment possibly, historically on where these trade. But we welcome an ETF. The more exposure for Solana and the more holders and the more, it becomes more mainstream, it's just better for the underlying asset itself. So we think having an ETF is going to be, even more beneficial for us and for companies in the future.
I'll just double click with an example if it's okay. So, BlackRock filed in mid 2023 for a Bitcoin ETF. Bitcoin was roughly at 25K. And then by the time it went live in January the next year, Bitcoin was in the 45 to 50K range. And then you saw really strong flows and it pushed it up to 70K. So you had Bitcoin more than double due to an ETF, and you saw MicroStrategy perform exceptionally well over that time. So I am actually looking at spot Solana ETF as really good for us and for Solana as a whole. So we're excited about this and looking at it squarely as a big positive catalyst.
And how long do you think until we see a Solana ETF?
Speculation. I think a lot of people thought.
We may have just lost Alan. I think you're back.
Yeah, I think I'm traveling today, so I'm in New York. It's saying that the network, but I lost our train of thought there. Sorry about that. Sometime this year, I would hope, but I think that the staking revenue is actually causing a little issue. What I heard is that them figuring out how to stake it is causing a little bit of an issue.
I've seen a lot of ETF experts saying, we're in the 90% range for getting one this year. There was just some headlines out 2 days ago, basically saying that it could happen this month. So we're hopeful that it will happen sooner rather than later. But just like Alan said, it's a bit TBD.
Okay. And why did you decide to adopt a treasury strategy?
Well, one of the changes, we added the treasury strategy to our business because as we watched over the years, the value MicroStrategy's created, we were trying to figure ways to bring Upexi into its next stage. And when we were looking at raising capital and doing something creative, we decided on some sort of treasury strategy and looking at the value that was created by MicroStrategy over the years, and then us having to meet with GSR and then Brian, and we what we learned in that relationship was just the value of how it's created. And I can let Brian get into more how the value was created with MicroStrategies, but really that was what kind of led Upexi into entering the new strategy.
Yeah. What I'd say is digital asset treasury companies, when done right, can just create an enormous amount of value and might be the best way to invest in a digital asset for a lot of different investors. And so I will back up and I will say that I spent most of my career on Wall Street. I was managing a book of bank stocks, always in a long short construct for Citadel, Millennium, and Ballyesne. And the reason why that's important is these are just banks. And so, like, if you think about it, a bank will take a deposit, make a loan, they earn the spread between the yield on the loan and their cost of deposits. We're the exact same way. We raise funds from the capital markets, we invest in Solana, and then we earn the return between, or the spread between the return on Solana and our cost of capital. And so I think that, plus the fact that knowing that when you issue equity above book value, it is by definition accretive, enabled me to really internalize where all this value creation emanates from. And so we're just basically employing that same model. We're following what MicroStrategy has done and actually trying to improve on it. So like Alan mentioned, we are staking our SOL and we're turning our treasury into this productive asset rather than letting it sit there idle. We are buying locked SOL at a discount for built-in gains for shareholders. And then the whole capital markets flywheel, where, in my opinion, most of this magic actually emanates from. It's almost tantamount to capital markets arbitrage. I can get into the math and explain this in much more detail, but when the market awards us a premium to the underlying value of our digital assets, we can actually monetize that for the benefit of shareholders. And so, yeah, it really is for all the value creation that we can do, which is what caused us to really push on this and move into it in a big way.
Why should there be a premium on in these sorts of cases, or why is there?
In my mind, it really emanates for three reasons. One is just the market wants access to crypto in the form of a familiar equity security. They essentially want to buy SOL in their Schwab account. You saw this with Grayscale's closed-end trust GSOL, where before it filed to convert to an ETF, it was routinely trading at a 500% plus premium. I also think that this emanates from access to these different value accrual mechanisms that you otherwise wouldn't get. And for example, this is like our ability to buy locked SOL at a discount. And then the last reason is just putting my bank investor hat on, going right back to that example of us earning the spread between the return on SOL and our cost of capital. Essentially, we earn that spread not just this year, but in future years as well. And so when the market expects us, or Solana, to have strong future returns, that spread is quite positive, and they will present value that, add it to the NAV, and that's where that premium emanates from. Yeah, and then we can, like I mentioned, monetize that for shareholders.
But in the case of like strategy, you can already get exposure through through the Bitcoin ETFs. Why, therefore, is there sort of a premium if it's allowing access that the idea is that it allows access that you don't have otherwise? In strategy's case, you do have access to Bitcoin. So why does the premium exist there?
This comes from a lot of the intelligent capital markets issuance. You can actually get into this capital markets flywheel. So let's start with the premise that folks are willing to ascribe this premium to MicroStrategy. I'll use them as an example. Let's just say they trade at 2 times. Then what MicroStrategy will do is it will go out and it will raise equity at 2 times. And when you raise equity at 2 times book, you are essentially selling $1 for 2, or it's tantamount to buying Bitcoin half off. And so what that results in is your Bitcoin per share moving up. And then if your Bitcoin per share moves up, your stock should move up accordingly. And that helps you maintain that premium multiple. And then the cycle will just continue. So essentially, if you buy into MicroStrategy at like a 2 times multiple, you are buying half a Bitcoin. But if you expect them to continue to compound that Bitcoin per share, you actually will be better off over time. And so that's basically the way that it works. What I'd say is like MicroStrategy increased Bitcoin per share 74% last year. And so as long as you continue to expect them to be able to do this intelligent capital issuance and increase Bitcoin per share, even though you're buying in at this premium to underlying book, you will soon be better off if they continue to do that.
Okay, so people sort of buy in on the expectation that they sort of think a greater fall at some point is going to come in later, and it just sort of keeps going until essentially you run out of sort of new people coming in.
Not a greater fool, really, because a lot of this, like the biggest thing that will determine MicroStrategy's success or our success is like the performance of the underlying token, which is why it's super important to make sure if you do invest in a digital asset treasury company that you're doing one that is underpinned by a token that you think will not only be around in 5 years, but will continue to outperform and can be an end game winner. But I think a lot of this just emanates from these strong views on forward Solana returns or Bitcoin returns, and then the companies being able to monetize that for shareholders.
And with Solana, I think people are not only anticipating the growth of the price of Solana, they're also on Wall Street. They're able to add in and forward look at that yielding of the staking revenue. So that's one of the other reasons. Like that was what we talked about earlier. We think that's a differentiator for us than even from Bitcoin. Even though Bitcoin is obviously the premium asset for digital, but we think that gives Solana Treasury Company a little bit of an advantage.
Okay. And what would happen in the situation were like Solana, the price of Solana to drop 96% again, like it did a few years ago? Like what happens in that situation?
So it depends on the company. Yeah.
Go ahead, Brian. It's a big speculation, but yeah.
So one, what I would say is, I think like a lot of these black swan events are now probably over with for Solana. So obviously, like FTX was very well tied into Solana, and I don't think like there is that vector anymore, obviously. And like I was mentioning, I actually think when looking at positive catalysts and putting things on a risk reward basis, there's many more things that could go right than could go wrong. But what I'd say is like it's also really important for investors to actually look at each company's capital stack and the amount of leverage anyone is taking on. So for us, we are funded entirely by equity. So we raised a $100 million pipe, and we were not taking on any leverage. We have disclosed that we have this small line, which we can pay back at any time. But basically, we want to do things in this risk prudent fashion where you should take out a little bit of leverage if you are betting on an asset that will tend to move up over the medium term, but you have to make sure you don't take on too much leverage to where you can get in trouble and become a forced seller if the environment turns on you for unforeseen reasons. And so we are growing and we are maximizing shareholder value, but we are doing it in this risk prudent fashion to make sure that we can weather all market environments. I think like it's obviously very tempting to take out as much leverage as possible to try to grow Sol as much as possible or BTC as much as possible, but we're making sure we're doing this in this like risk managed way to where like we'll be here no matter what.
So can you clarify like the extent of the leverage you have then?
We disclosed it on the filing what we have, but we can't give you any real time, live time access to that because it's not public information. But we're maintaining. We've said publicly we're trying to maintain under 20% leverage, which would allow us to weather most storms.
That is where, just to give you a comparison, that is where MicroStrategy like places their leverage limit. So they won't take out debt greater than 20% relative to their NAV, and we're the exact same way.
Okay, so what sort of like price drop could sort of be stomached? Like, is like 80-90% fine, or is that like game over at that sort of level of leverage?
Well, I mean, that's a big assumption that we wouldn't make any moves along that time. But I think with 80%, with 20% leverage and 80% downturn, and some people, we want to talk about, all the downside with it. Obviously for us, if we have cash available in those times, those are just opportunities for us to add to treasury at that moment in time. So even though it sounds scary for downturns for companies who are prepared with both capital available and a good cap structure would use that to like MicroStrategy has done over time. Would just use that to add to the treasury, giving the shareholders a much bigger opportunity in the future.
Yeah, just to put it in perspective, and I'll speak in MicroStrategy terms, like last I looked, they had 45 billion of unencumbered Bitcoin. They do have convertible notes outstanding. They have laddered those with different maturities. And this different studies that I've seen is you would really need Bitcoin to fall 95% for 5 to 7 years for there to be any credit risk and forced selling. And so we're trying to position ourselves the same way to where, I think if we were in that environment, we've all got bigger things to worry about. But yes, yeah, I mean, there is always risk around that, but we view it as hopefully minimized.
Okay. And do you think in terms of like the large amounts of locked SOL that have been sold over like the last few years and sort of becoming available, do you think that is sort of depressing the price to some degree, or sort of keeping it around the sort of, I mean, a lot of it was sold around $130, $140. With that sort of continuous supply coming to the market, do you think that's might frustrate it for a couple of years, or is that nothing that investors need to worry about?
I think this probably goes to, why Upexi pivoted. A lot of companies are pivoting to treasury companies or to more access to crypto, right? As this administration now seems to have taken a tailwind, like a headwind provided over the last couple of years, to a tailwind here in the next 4 years. Hopefully, that overall adoption of crypto would eat up all of that, all of the excess or whatever people anticipate. We don't think there's an excess, but depending on your point of view, just that tailwind should provide support for the top digital assets.
There's not actually a ton out there. Many months ago, there was. I think you can almost look at the discounts as a proxy for how much supply of locked SOL there is. And those discounts, obviously, in the crypto winter were 50% plus. Now they're like mid teens, roughly. And so, what I'd say is, even when we first launched, we were getting marketed just like locked SOL at a discount quite often. It's much less so now. I'd say like we're not worried about our ability to access locked SOL because we know and are close with all the major players. Even if there are none out there being advertised as for sale, like we can always ping all the major holders. And also too, a lot of the blocks that we're seeing are larger blocks to where you have a very limited set of buyers. There's not that many folks that can actually act on that. We are one of them, and so we think we'll still have good access. But I'm actually not like personally that worried about like a lot of locked SOL being for sale depressing the price of Solana.
Okay. What do you guys make of GameStop dropping 20% and SharpLink dropping around 70% after the sort of latest Treasury Reserve announcements?
I mean, I could comment on GameStop. I mean, it's just a constant change of business model and unlimited equity financings for a business losing ridiculous amounts of money. But so on that, we think even with these digital strategy companies, people have to understand how the value takes time. So we don't want to comment on anyone else's trading, but we're not too worried about it. We believe in the strategy. So we certainly wish SBET the best, and we have confidence that their multiple will find its way just like ours will over time.
I think I could mention this. So there's like a technical versus fundamental component happening here to where they raised a large pipe. A lot of the folks in it, like you can look at the S3 and see who it was. And then what I'd say is like, I think over the short term, there could be some folks that are looking to take gains, but over the long term, like there is a potential for them to garner a more peer-like multiple. In my stance, without getting too much into valuation, like as you are a smaller company underpinned by an asset with all else equal, more growth potential, you should take this higher multiple. So I say that relative to like MicroStrategy, which last I looked was at 1.7. A lot of smaller companies should have this embedded growth premium, and then when you move off BTC, there should be this additional growth premium for growth in the underlying asset as well. So yeah, maybe I'll leave it there, but I think like over the long term, the fundamentals should come back in and overwhelm where some short-term technical selling pressure could be, pushing the stock down, maybe temporarily.
Okay. And do you have any concerns about the number of companies that are acquiring these leverage positions? Most of them are for Bitcoin. I believe Anthony Pompliano is the latest person to set up a company to buy Bitcoin. Like, it's definitely a flywheel for sure. But do you sort of have any concerns that it's sort of building up a little bit too much?
I mean, we try to stay focused on our business and what we're doing. Now, obviously, we get concerned if people or companies, do things that are irresponsible or too much leverage that maybe affect the perspective of the industry. But all we can do is, manage our house accordingly. And like Brian and I and our team plan to really just operate in a, very, very forward-facing and professional manner and stick to our leverage and just operate our business. But, obviously, there's a concern when there's but we can't be responsible or worry too much about that.
The other thing that I'd add is exactly right. Like if you do things in a manner that is not befitting for a public company, you're imposing risks. But when done right, I actually think digital asset treasury companies are supremely positive for the token ecosystems that underlie them. And it's really for two reasons. One is we are effectively a one-way acquisition vehicle for Sol, meaning that we have a buy and hodl strategy. The end game is for us not to push up price, but that could result because of it. And while this is not what we're trying to do, like a rising price will be beneficial for Solana to attract users, developers, and dApps. The second big thing is that we are raising visibility of Solana, particularly with traditional investors and institutions. I can't tell you how many calls Alan and I have done with sell side analysts, and a lot of them are asking what's the difference between a smart contract blockchain and like Bitcoin, and what is Solana and what differentiates Solana, and we're out there evangelizing Solana to Wall Street, and I think like this is just a huge benefit that we can provide the entire ecosystem.
Sure. And have you modeled out what could happen if Strategy's Bitcoin play unwinded very rapidly?
No, we haven't.
Other than to say, like, I think the odds are quite low, and you're seeing that with like the convertible investors giving them basically free funding in the form of 0% interest rate. So I think like they are also effectively saying they think there is almost no credit risk there. So yeah, we haven't modeled it out exactly, but would just mention that at least I personally ascribe very low odds to that happening.
Okay.
We try not to model out all the doom in the world. We try to keep a perspective of something that we think the future is a little brighter than that.
For sure. Maybe I'm paranoid because I've been through so many sort of major systemic things in crypto, from Luna, FTX, and I've only been here and here, not as long as
Yeah,
many.
but it's the same as Wall Street, right? We've been through all of the same things on Wall Street, and the truth is, whether you go back to the housing crisis, the crashes. I mean, anyone who's been steady and I mean, just look at Warren Buffett and the greatest investors. They just ride through that. They maintain a really steady hand. They don't get panicked out by those. I think cryptos has a lot of these, you know, things that are more severe because the investing public in it is probably a little bit younger and more apt to, react a little more, I guess, emotionally. But we really, think that whether it's a crypto winter or a good time, that if you're steady through it and we maintain a good process, that it should turn out, you know, in a, the best possible scenario.
Yeah, I'd point out that there are these inevitable crypto winners, but there are also these inevitable crypto boom periods. And if you look at a company that does things right, like MicroStrategy, you're just kind of on pause during these crypto winners. And so as long as you don't get over your skis, and I think like the best metric for MicroStrategy is Bitcoin per share. So in 2022, 2023, they were just a bit on pause with the capital market strategy. They still increased Bitcoin per share by mid-single digits. And then last year, as you move into this inevitable boom period, they were able to increase Bitcoin per share 74%. They basically created this Bitcoin gain, which is tantamount to free Bitcoin for shareholders of $13 billion, given their access to the capital markets. And so, yes, I do think like this model could potentially be a bit on pause during bear markets, but that's all it is kind of on pause when you do it right. And then when you move into the inevitable bull market, like we could really just create a ton of value for shareholders at that point.
Yeah. Yeah,
I think that's where
it's
that
not
premium comes from too. Sorry for that.
yeah. But it's not just me. I was at a conference this week, and sort of, in the speakers room, there are definitely a few other high profile people sort of talking quietly. Not a lot of people want to be public about the risks of this, but they sort of had concerns. And then also, yesterday we saw that Coinbase Institutional's global head of research wrote a report that said the growing number of public companies focusing solely on acquiring crypto introduces systemic risks. So there definitely are concerns about that. Is it worth the risk in all of these companies doing it if there is some risk that it could be the next Luna or FTX moment?
I think this is why you have to be underpinned by an end game winner. And what you're seeing is there are a lot of small cap companies on NASDAQ that are seeing this as a playbook to have their stock move up, quite a lot. And they need to do something to differentiate themselves. So they're moving down the risk curve, moving into smaller and smaller tokens. Um, my personal view is there's only a small handful of assets that this could actually work on. You need to have full confidence that you are underpinned by an asset that will not only be around in 5 years, but will also continue to do well, because the biggest thing impacting our success is the performance of Sol. And so if you move down to the 200th largest token, most of these altcoins end up down 95% after like 3 to 5 years. So you obviously don't want to be underpinned by a token like that. So this is a huge competitive advantage for us. Like, we are the largest Solana treasury company by number of SOL held, by market cap, and we plan to continue to push. And we think being underpinned by an end game winning asset such as Solana gives us this big advantage. But yeah, completely agree that not all of these are going to work.
Do you imagine you might diversify the treasury into other assets, or is it always going to be Solana?
Only Solana.
We publicly said it's Solana.
Okay, cool. And what advice would you give to other companies that are considering holding crypto in their treasury but are unsure about the risks and benefits?
We honestly, we don't want to give a business advice to other people. we're our strategy is public. They could use that playbook if they want. That would be our best advice. We're stuck on and have spent a lot of time, Brian and I and the team, the board, developing a strategy we think is the most risk prudent we can do. All businesses, all cryptos have risk. So I think just learning to manage that would be the best advice you can give anybody in business.
Gotcha. Okay, and how do you think sort of crypto plays out over the next 6 to 12 months?
So we think, and we've said this publicly too, is any time in an industry where these headwinds that you've had, if you've listened to the SEC, they said the U.S. has trailed the rest of the world on crypto and on adopting crypto, supporting the infrastructure, the ecosystem. So when historically, when any tailwinds or headwinds turn to tailwinds, industries usually flourish. Obviously there's still going to be, like Brian said, the 200 token, the 100. You don't know what's going to happen with any of those. And in fact, so we think it has all of the makings of a really good opportunity over the next not only 6 to 12 months, but probably over the next like 3 to 5 years.
Yeah, short term, like if anyone asks me like where's crypto going to go over 1 to 3 months, my answer is probably with the macro. Like will depend on what happens with tariffs, what happens with like geopolitical tensions, what happens with inflation and potential monetary policy. But we'll just like +1 to what Alan said on like this key headwind turning into this tailwind with like more regulatory clarity in the US, and this potentially just being one of the biggest potential catalysts for our industry that we almost might have ever seen.
Yeah, historically, whenever the government kind of gives business people the rules that they can play by, people find ways to do really well. So hopefully that's where we're at in crypto.
Yeah. All right. Well, I've grilled you pretty hard. You made
we
it
can take
through.
it. We can take it.
Cool. Well, I want to thank you both for joining this episode. And as a reminder, our newsroom works tirelessly to get you accurate, informed crypto news. If you want to stay ahead, read the blog. Thanks, and see you next time.
Thank you very much.
Thanks, Tim. Thanks, Brian.